Hello and welcome. In this video, I'm going to share with you how and why historical data with respect to price action when applied to any trading process will reduce your trading mistakes, increase your win rate, free up your time, filter out the noise, and reduce stress, which usually comes from the fear of missing out or from making a directional mistake. Here's what multi-billionaire hedge fund manager and the father of algorithmic trading, Jim Simons, says about historical data, and I quote him, "We search through historical data, looking for anomalous patterns that we would not expect to occur at random." Jim Simons is considered the most successful money manager in the history of modern finance. So what is historical price action? And what does Jim Simons, who is incidentally an award-winning MIT math professor and formerly an NSA codebreaker, mean when he said patterns that we would not expect to occur at random? Well, historical price action is how price moved in the past during particular days and particular time intervals. For example, Monday from 9:10 a.m. to 9:30 a.m. or Wednesday from 11:10 a.m. to 11:30 a.m. With respect to Jim Simons' statement, as an algo developer myself, I believe he means what I and other algo developers are searching for: consistent price action. A majority of price action is in fact random, yet there is a small percentage of price action in markets across every tradable instrument that occurs over and over and over again. Jim Simons, who is known for being a short-term trader, is likely looking for those anomalous price action patterns that, based on its consistency, would not be deemed random. My name is Rafi Sosykyan, and I'm the principal of Pinnacle Quant LLC, a licensed registered commodity trading advisory firm that specializes in algorithmic trading software development. A little bit of background on me. I consider myself a techpreneur, and I've founded several other companies, including Register Bureau Inc. as well as SoSpuz Inc. I've been trading a little over 2 decades. In late April of 2020, I changed my firm's focus to concentrate on retail traders instead of the commercial side, where I was focused on managed funds and hedge funds, as I felt retail can benefit more from my services than the commercial side, which has thousands of data and algo developers just like me on their payroll. As for my educational background, I started out as a computer science major and changed my major to business administration and graduated with a degree in business, and then I obtained my MBA as well. However, I never lost my first love, which is solving problems via code. Back to price action data. Most retail traders don't realize how much emphasis and money the commercial side, including managed funds and hedge funds, spend on data. In just 2019 alone, firms across the globe had spent $32 billion on data. Just search LinkedIn for data engineer or data scientist job posts, and you'll find hundreds of such posts, mostly by investment banks, hedge funds, and insurance companies. The reason why the commercial side spends so much money on data is because they rely on data to make their trading decisions. Data isn't the only thing they rely on, but it certainly makes up what I call the foundation of their trading bias. Conversely, most of retail, some will say nearly all, either don't use price action data or don't know how to apply price action to their trading process. Instead, retail traders place tremendous emphasis on trading indicators such as market profile, Fibonacci, VWAP, etc. Even algos of some managed funds incorporate some level of indicators such as the ones I just mentioned, but they use it differently than most retail traders do. Larger firms incorporate technical indicators to confirm their directional bias prior to entering a trade, but their directional bias, meaning if they should go long or short, is still based on the foundation of historical price action data. If a technical indicator confirms their directional bias, which is based on historical price action, then they enter the trade. If not, they skip the trade. As I mentioned, funds across the globe have spent nearly $32 billion on data, and some of that on building sophisticated software to be able to weed out random price action data and identify consistent price action data. I decided to build software for all retail traders so that even traders with a relatively small budget would be able to take advantage of it. If you'd like to find out about this software, it's called Price Action Harvester, and you can see pricing and download information on my site at pinnaclequant.com. Just click on the Price Action Harvester tab when you're there. I chose NinjaTrader to build my software on, as they already have over 60,000 mostly retail traders using their software. And their software, including their market analyzer, is quite easy to use. I built my software to be specific, an add-on indicator, to take advantage of NinjaTrader's already available market analyzer front-end functionality, thus making my software's price both reasonable and affordable. Now, before I demonstrate how I use Price Action Harvester, I wanted to share with you something that is quite unique to retail traders, and that is, unfortunately, most of them, even according to the latest studies, lose money over time. In fact, the latest study I read showed 97% of retail traders lost money over time. They made money initially, but over time they lost money and kept losing. To me, that points to a problem within their trading process. Conversely, hedge funds in 2019 had the best year since 2009. They returned an average of 10.4% based on the HFRI Fund-Weighted Composite Index. Having pitched my services to very wealthy investors as well as hedge funds, I can tell you they put far more emphasis in a trading process than they do in trading performance. While that may seem counterintuitive to most traders, to sophisticated investors, a solid trading process that is based on data can last through turbulent markets. Most hedge funds, particularly those that run algos, don't chase trades, they don't hope for news, and they don't fall for a common chart pattern and false breakout traps. Simply avoiding the costly mistakes of trading may take the average trader from red to black in a relatively short amount of time. When any of us goes out to secure a loan, the first thing lenders do is check out our credit history. They are looking at our credit score as well as our past payment history to ensure they recover the money they lend out. Lenders don't know if we're going to pay them back. In fact, technically, since our payment is a future event and there are ultimately only two possible outcomes, either we pay them back or we don't, then there's only a 50% chance that they get their money back. However, 50% is not the actual odds of them getting paid back. The odds are based on our payment history. If historically you've made payments on your loans, then odds are, all things being equal, that you're going to continue to do so. The same is true when it comes to trading. At first glance, one would assume price can go up, can go down, or it can stay the same. And it's all random. But if with relative consistency, price moved in a particular direction, for example, price moved higher on most Mondays between 9:10 a.m. and 9:30 a.m., then the odds are price may move higher again on that day during that time. Here's how you can find relatively consistent price action using Price Action Harvester. The process is quite easy. Price Action Harvester comes with price action templates you can use on NinjaTrader's Market Analyzer. They are 30-period lookback, 15-period lookback, and 5-period lookback price action filtration templates that are looking for historically statistically favorable price action data with the following parameters. A minimum of 60% of the 30-period lookback price action must be consistent. A minimum of 65% of price action for the last 15-period lookbacks must be consistent, and a minimum of 80% of price action must be consistent for the 5-period lookback. A yes here means those minimum requirements are met. So for the 5-period lookback, a minimum of 80% of the price action must be consistent, and a no means the price action was less than 80% consistent. Now, all of this is already set up for you. There is nothing you need to do other than, upon Price Action Harvester loading this data, you simply need to export the data by right-clicking anywhere on the screen and left-clicking Export. You then copy and paste the data you exported into the spreadsheet that comes with Price Action Harvester, which will filter through all of the historical price action data you exported and will quickly identify relatively consistent price action for specific time slots where you can place potential trades. The spreadsheet is essentially looking for 3 yeses, a yes for each of the time periods Price Action Harvester analyzed. So let me do a quick overview of the spreadsheet. We have the 5-period lookback, the 15 and the 30-period lookbacks, and then we have the analysis portion, which contains the formulas that will exclude the non-consistent price action data and give us the relatively consistent price action data that we're looking for. Of course, you get this very spreadsheet example with price action harvester. So you just have to copy and paste the cells in. There is a separate tutorial that I have in the pinnaclequant.com control panel when you sign up for price action harvester that covers this very spreadsheet. But my purpose was to make it so easy that someone who's never used a spreadsheet will be able to easily learn how to use it. As for the light blue columns, they are the possible long trade time slots, and the colorless columns are the possible short trade time slots. The time slots themselves have been divided into 20-minute increments, except I exclude the initial 10 minutes of the top of each hour and the 10 minutes from the middle of each hour, as I found those time frames to be typically too choppy. Plus, these time slots alone for the 23 instruments being analyzed provide us with 598 possibly tradable time slots, which is plenty. Nonetheless, most of the time, price action in any given trading day is deemed random, but this spreadsheet will identify in these yellow yes highlights the relatively consistent price action data where we can potentially make a trade. As you can see in the bottom stats here, out of 598 possible time slots, with just these 23 instruments, we end up with 16 potentially tradable time slots. And that's plenty of trades to make in a single day. Okay, allow me to quickly show you the initial pre-filtered results from the price action harvester that were captured within NinjaTrader's market analyzer using the 5, 15, and 30-week look-back period templates that come with price action harvester. These are the very results that you're going to be exporting into the spreadsheet for the purpose of filtering out random price action and capturing the relatively consistent price action. Of course, the spreadsheet also comes with price action harvester. Once price action harvester crunches through the historical price action data and loads the pre-filtered yes/no results onto Market Analyzer, the only thing you need to do is right-click on Market Analyzer and export the yes/no data, then copy and paste it into the provided spreadsheet. I've sped up this clip, but please feel free to stop it in case you need to verify these entries against the spreadsheet, which I'm going to show you next. And this is what the provided spreadsheet is going to look like once you have copied and pasted all the exported results into it. Again, I do have a separate, easy to follow tutorial that comes with Price Action Harvester that shows you how to quickly do everything you need to do to get the filtered historical price action results shown towards the bottom of the spreadsheet. In essence, this spreadsheet will display if you should potentially go long or short based on historical price action during the time slots and day for which you analyzed your desired instruments. So, how did using relatively consistent historical price action as our signal do? How many wins? How many losses? Well, let me quickly show you all the inputs of this spreadsheet, including the time slots analyzed. Remember those time slots. I'm going to go through every one of the 16 trades that Price Action Harvester identified as having relatively consistent price action and show you on the chart what would have happened had you entered the trade precisely at the time of analysis and exited precisely after those 20 minutes were up. I'm not going to rely on any other indicators. I'm not going to look for support. I'm not going to look at resistance. I'm not going to look for a short-term price trend. I'm going to exclusively rely on price action data, on the numbers as produced by Price Action Harvester. We are just looking for the yellow yes cells on the spreadsheet because that yes indicates that the minimum threshold for the 5, 15, and 30 weeks of lookbacks have been met. I've sped up this part of the video because otherwise this video would be a lot longer, but please feel free to stop the video and confirm everything I'm showing you. Moreover, you can always check on the charts yourself for the instruments and the time slots that I'm showing. They are all for January 21st, 2021. As you're watching these trade entries and exits, and as I'm marking them here on the spreadsheet as wins or losses, I want to reiterate that I'm just using the 20-minute time slots that Price Action Harvester analyzed as both my entry and exit points. You'll note that many of these trades kept moving in the direction identified as having price action consistency by Price Action Harvester. So a trailing stop may have been used, but for the purposes of demonstrating Price Action Harvester's capabilities, I'm only displaying the entries and exits based on the 20 minutes I analyzed on price action harvester, meaning if the time slot analysis was between 9:10 and 9:30 a.m., then I'm hypothetically entering the trade at 9:10 a.m. and exiting the trade at 9:30 a.m. Incidentally, as you know, heavily traded markets like currencies, futures, and crypto trade far more than just these time slots, which incidentally make up the entire regular trading hours session. But if you'd permit me, I'd like to share my view on why I personally like to confine manual or semi-automated trading to the regular trading hours session. And yes, there may be lower margin requirements for regular trading hours, but that's not the reason. See, I've been trading for over 2 decades. I'm a licensed professional in this industry. And in my view, if you're trading manually or semi-automatically and don't commit to specific trading hours or business hours, you may end up getting sucked into the vortex of the trading world where it becomes harder and harder to stop checking your phone for your prices, to get off your desk and to just look away from your computer. Yes, automation partially solves that problem, but for those that trade manually or semi-automatically using NinjaTrader's ATM option, I know of traders even on the commercial side that stay up all night worrying about their trades, researching everything from Reddit to Twitter just in case they miss out on some move. Others wake up way before dawn to try to read up on news. The amount of energy that one can spend on trades can easily take up all of a trader's free time, cutting into family time, spiritual growth time, me time, and God forbid may even lead to stress-related health issues. If one doesn't stick to trading hours, or again business hours, instead of you working the trade, well, the trade may end up working you. In my view, that's a bad position to be in. The trade needs to be serving you, your needs, your objectives. You need to dictate the terms of your time, not the market. Using historical price action and finding relatively consistent price action for specific days, specific time slots, and specific trading instruments will hopefully free up plenty of your time so that you can run your business of trading, then spend the rest of your time taking care of you and your loved ones. One quick highlight on what you just saw on USD/CAD. You'll note Price Action Harvester correctly identified not one, but 2 false price breakouts and nailed the top of both of those price levels. The first one was at 6:40 a.m. and the second one at 9:40 a.m. Pacific time. If a trader were to get caught in false breakout traps like that, they're likely to think to themselves, gee whiz, I must be bad luck. Everything was going higher until I entered the market. In my view, trading is not a matter of luck. It's a matter of knowing your odds based on historical price action. Firms around the globe that have analyzed this price action data as well, they know that price historically moved lower during those time intervals for USD/CAD and for relatively recent Thursdays. It's important, in my view, for retail traders to be armed with that same type of information so that they don't fall for these types of false breakout traps. So ignoring all news and noise, Price Action Harvester would have ended up with 4 losses and 12 wins. That's a win rate of 75%. And that percentage is relatively in line with the minimum historical price action consistency threshold percentage that we applied when we ran Price Action Harvester's 5, 15, and 30 look-back period templates in Market Analyzer. I hope you've enjoyed watching this video. If you'd like to try Price Action Harvester, you can download it directly from pinnaclequant.com/price-action-harvester and try it yourself. Once you incorporate Price Action Harvester into your trading process, I believe you'll never place another day trade without it. Thank you so much for your time, and God bless.